Getting finance for your new build or renovation can be tricky at the best of times. However, if you're building and renovating on a challenging site, one that has risky overlays or is bushfire prone, then there's specific things that you need to know before you go and apply for your finance. This video is going to be super helpful. This video is part of our Rebuild and Build Better series, so be sure to subscribe and like the video and check out the comments in the description below for more information. Hello, I'm Amelia Lee from Undercover Architect, and I help and teach homeowners how to get it right when designing, building and renovating their family homes. In this video, I speak with Amy Beattie from Good Green Home Loans. Now, Good Green Home Loans are not your average mortgage broker. They actually help you find a home loan from an environmentally responsible lender who doesn't use their profit or power to support the fossil fuel industry.
Are there specifics to know when it comes to financing for bushfire-prone areas in terms of understanding the different BAL ratings, the bushfire attack level ratings, and what that might mean for how much money you'll be able to access or what deposit you'll have to save up in terms of the difference in how the bank might see your risk levels and how much what percentage of the property they're willing to finance?
Yeah, so the percentages of the property they're willing to finance is definitely crucial overall. When you're in that zone of kind of 70 or 80% plus, you've got mortgage insurance costs that will be added to your loan, and there has to be room under that percentage that we're talking about for the cost of the insurance. So 90% is probably about where the total cost of your project needs to be capped, including a contingency of unknown bucket of money for unexpected expenses, because then when you add on the mortgage insurance, the total loan ends up being 92, 93, 94. 95 is the limit, generally speaking, for most banks, and many won't go that high. So you really begin to reduce the different bank options you've got to choose from. So 90% is definitely the top end of the total project, including a contingency. And banks don't specifically talk in terms of BAL ratings directly. So you know, those kind of so the scale of the BAL rating doesn't really matter to the bank as such, but banks assess the overall risk of the property itself in the valuation, and that risk analysis is about 7 or 8 different risk factors. And generally the risk factors, the scale is 1 to 5. 1 is low risk, 5 is high risk. And the more 1s, 2s and 3s you can have, and hopefully the majority of the risk factors are 1s, 2s and 3s, then if there are 4s and 5s in there that are related to bushfire, again, the bank's weighing up everything. So if they can mitigate the bushfire risk by an insurance policy that covers the bushfire risk, then they're not going to be so hung up on those risk factors when all of the others are strong. So again, it comes back to that overall picture, definitely. When you're borrowing under 70%, and up to 80%, you also take out a layer of the mortgage insurance company being involved and their whole new set of policies having to be met, or their criteria having to be met. So the bank has to answer to the insurance company, the mortgage insurance company, who says, yep, we will insure this loan for you, or no, we won't because of these things. So you know, the policies of the insurers vary substantially. So again, another reason why you need to get your mortgage broker involved early, so you can find the bank that has the mortgage insurer that has the policies that work with your particular circumstances. So it's very complex.
No, so well, that's really interesting to understand those kind of risk criteria and the different layers that the bank will assess that by. So, if your property is a BAL flame zone, some people may think that that means that it's going to be impossible to finance. But from the sounds of that, it sounds like it's actually just how it sits in all the risk factors that the bank is going to assess as part of all that combination. And if you're only borrowing, say, 70% of the property's value, and you've been able to, calculate that once it's got a house on it built to flame zone, that you'll mitigate the risk and those types of things. Am I understanding that means that you actually stand a better chance?
Absolutely. So you won't find it impossible just because you're a BAL, the highest level of BAL risk rating. Everything else about your application will then be scrutinized, and if it's strong on all of those other levels, and we're talking about, if you're wanting to build, and in order to build you need a 30-year loan term, but you're 65 years of age, the banks, it doesn't matter what the flame zone is, that's not a position that the bank wants to put anyone in financially. So everything else has to be considered, but if it's strong in all of those other factors, the flame zone won't matter, as long as it can be insured.
Yeah, that's it's quite interesting actually to sort of remember that it's a cocktail of different ingredients, that it's not just a blanket statement of you've got a property with these zones on it, it's going to be impossible. It's like, actually, if you're committed, it's a case, I suppose, of knowing that you can be financially sound in those other areas, that you can have a sufficient deposit, and that you're following those avenues of, I know as being self-employed for so long, the property purchasing that we've done, we've always had to be geared at a much lower rate than if I was employed. But that then has enabled us to be able to argue the point in terms of our ability to pay back the loan and those kinds of things and achieve the mortgage outcomes that we needed, because we just knew the rules. We knew what we needed to do in terms of
Exactly. So again, that's what your broker's there for. And you go to your broker, and the best thing you can do, or your bank, if that's how you do it, you go directly to your bank. You literally have to put all your cards on the table, and you have to speak openly and honestly, so that the banks can do the right thing by you, knowing the full picture, and assess it thoroughly. So sometimes as a broker, I feel like I need to sort of poke and prod to get the full picture from people, because they're nervous about saying, there's this that's complex, or there's this that's a bit tricky. But the more open and frank you can be about the full picture and answer all the questions that are thrown at you, the better chance the broker's got or you have of finding the right bank that is willing to help you out.
Yeah, and I always found that a much easier conversation to have with a broker than with the bank manager, because the last thing you wanted to do was throw red flags at whatever you were doing. So
exactly, and that's the thing, when you go to a bank manager of one bank who has one set of rules that he has to live by with every client, the moment you say, I don't know, it's a bushfire prone zone, the moment he says, sorry, we won't finance a project that's in a bushfire zone, and you've completely ruled them out. So if you go to a broker and you tell them everything, they can just help you go straight to the right bank that they know accepts those tricky parts of your circumstances. So
yeah, that's fantastic advice, Amy.
I do hope that you found that video helpful. Be sure to check out the other parts of my conversation with Amy Beattie from Good Green Home Loans. It's really useful information if you're looking for finance for your new build or renovation, particularly if you're doing that in an area that's bushfire prone or on a property that has a bushfire overlay. And be sure to go ahead and comment and let us know what you thought about this video. As always, thank you for tuning in and for letting me be your secret ally. Until next time, bye.